Hello, legal vlogs. Hello, legal eagles. Welcome to legal vlogs with ZP. And today we're going to talk about the stable coins versus the state. It's been a journey. We've been talking about AI for a long time, and today we're going to talk about something different. Of course, AI will be probably mentioned because we're in a digital age, but we are going to really focus about digital sovereignty and more of the power of a state to control. And the exact question is stablecoins versus the state, and how borderless money, digital money, is trying to shatter monetary sovereignty. This brings an essence of why a state should try and control its digital infrastructure. It's a matter of digital data control. It's a matter of monetary policy. It's a matter of security. These are three essential things that most states would like to control and protect. There is a quote by Miller. It's Milton Miller, that says, "Sovereignty is the power to say no in the cyberspace." And this is what most states don't want to lose, the power to say no to this and that, to avoid neo-colonialism in terms of the digital space. Back to the essence, why is stablecoins really a threat to this, to most states, and why would they feel the power to control? One, stable, it's based on paired fiats like US dollar, like proxy US dollar. It also has issues. It's given by or issued by private entities, mostly extraterritorial, not the state. And another issue is that there is more control. We don't have a central unit like Central Bank of Kenya, Central Bank of India. So this operation of why it just operates 24/7 without a decentralized ledger causes a choke point, no central point, choke point. It raises a clash between now sovereign borders versus now the design of the internet borderless design becomes very difficult for a state to control. This raises legal fractures. For example, is monetary sovereignty in terms of legally. Will a state have the legal capacity to ban all the stable coins, and to what extent and how? And will they be able to achieve that legally? So this becomes very difficult. Nigeria tried in the last 2023 and they were not able to do it. Their stable coins operating until now. It also raises issues of enforcement. It brings a black hole of enforcement, especially when probably the issuer is in Cayman Islands or is in state X. The reserves are in state D or C, and operations are in another state. It becomes very difficult to try and control that. We had the issues of the stablecoin Luna and Terra between the Singapore and US. It was at first issues of jurisdictions came in, where at least they were able to use the Howey's, I hope I'm doing it, WHOWEY tests to able to identify whether it has jurisdiction or not. The Howey state is more of economic realities. They were able to just use that test to try and categorize the stablecoin as a security. But this is not something uniform that would apply uniformly to the rest, because there are others that relies on formal labels. It becomes very difficult for a state that has no jurisprudence on it. There is no laws on it to control. This becomes at times difficult for the state, because the state is supposed to first take that digital asset, that stable coin, that cryptocurrency, and identify it as a security. Their contracts, they're supposed to fall under investment contracts for them to be governed under Securities and Exchange Commissions of a country that is under the state's control. And the Howey test, like I just had said, the full test becomes also very difficult, especially the last two, to govern, especially in issues of extraterritorial. We have the common enterprise that can be proven. We have the investment of the money. Where was the money invested, and how that can be proven. But now, how do you invest? How do you prove the expectation of the profits? And that expectation of the profit normally relies on other people. So the last two almost becomes very difficult to prove. We also have issues in terms of extraterritorial. overreach and conflicts. States unilaterally issuing global rules. For example, the EU's MiCA markets markets in cryptocurrency and asset regulation, where they are supposed to they can delist your stablecoin if it is not transparent, if it is not reserved according to their laws. We also have one in US. I think in US where they were able to issue sanctions on a cryptocurrency, the Tornado Cash, that had been linked with money laundering, virtual money laundering, and relations to people in North Korea. So this shows that there's an overreach of and conflict of extraterritorial when it comes to these regulations of the crypto stablecoins or any virtual asset. To wrap up the discussion of states supposed to up their gear to be able to adapt, because the traditional concept of sovereignty is now starting to change. It cannot survive the decentralized finance. We have the algorithms based stable coins that becoming hard. There is no reserve backup in terms of the value, and there are most states that are trying to be smart enough to ban, but other states are still trying to fight over that. This is our end of our discussion. This is the end of our discussion. See you in the next discussion. Probably will be more serious than this and no more. We'll see how it goes. Thank you. Bye.